What is up, you guys? Thanks so much for joining me today. It's your boy, the Finance Bro, and in this video, we're going to be taking a look at shares of Micron after the recent 800+% rally in the shares. We're going to take a look at a few fundamental and technical variables to see if there is still value in shares of Micron today. As always, this video is not investment or financial advice and is solely for entertainment purposes. All values that you'll see within this video are as of market close on June 19th, 2026. Let's dive right in here to the past 1 year price performance of shares of Micron. You can see that within that time frame, shares have outperformed the S&P 500 by almost 806%. On a year-to-date basis, shares of Micron are at almost 300% up on the year, comparing that to 10% on the S&P 500, a significant outperformance. You can also see there shares are trading at their 52-week highs. And when we look at that top graph, we can see for the past 11 months, shares of Micron have traded above both the 50 and 200-day moving averages. Slight dips here and there. One example is in late March, early April of 2026, when the market as a whole tanked due to the war in the Middle East. We can see also that around 11 months ago, the 50-day moving average in the green line started trading above the 200-day moving average in the orange line, which does indicate a technical buy signal. Shares have traded healthily above both averages for quite some time. That gap between the 50 and 200-day moving average has widened, which does indicate there is still positive price momentum in shares of Micron in the coming weeks and months. Mind you, this Thursday, Micron is reporting, so let's see how that will impact volatility in shares. A few key items I want to draw our attention to. I'll start with the earnings per share. This is amazing. Through 25 and 26, you can see earnings per share of $8.29, projected to be $62.34 per share, which does indicate earnings per share going up more than 6 times and still doubling from $62.34 in 2026 to projected to be $116.53 in 2027. That is almost a double in earnings per share. So when we look at that 800% share price appreciation for Micron shares, which does indicate in a sense a revaluation in the name for a variety of factors, demand, supply, being a price maker, not a price taker, all points we'll touch on later on in the video. But it is because of that re-rating in these earnings per share that management themselves projects that they're able to hit, and analysts as well. That 800+% rally in shares doesn't seem too crazy when you look at that. Here, yes, Micron does pay a very minuscule 0.1% dividend. I don't believe anyone's buying shares of Micron for the dividend, but hey, to each their own. When we look at the underlying fundamentals of Micron, you're seeing 85.5% sales growth over the past 12 months. Look at those EBITDA and EBIT growth over the past year, 352% on EBIT side, and even earnings per share over the past year of 409.1% growth. This is as of August 2025 numbers. I want to mention that coincides with the reporting period this week that Micron will report. When we look at the profitability metrics, gross margins of 58.5%, net margins of 41.5%. You're not seeing that much of a compression in margins. So if they're able to lower their input costs, right now they're heavily investing in factories, especially in the US, which is going to compress margins. If we're able to see an expansion of margins, you will see that trickle into revenues and profits as well. Look at that return on equity, almost 40%. Phenomenal allocators of capital. But when we look at those technical fundamentals, there's two different stories playing out here. When we look at the trailing PE, you're seeing that at 53.5. But when we look at the forward PE at 10.7, One is showing an overvaluation on the trailing side, but on the forward basis, Micron shares are not looking expensive whatsoever and are looking really like a good value bargain. Now, there was a boom and bust cycle that occurred in 2023 and early 2024. I'll show those later on in the video. I think it's important for us to take a look at that because that is the risk that Micron faces. Just naturally being in the business that they are a very cyclical company in nature. And if there's macroeconomic factors, spending slowdowns, you do see that hit revenues, profits, and the overall bottom line for Micron. And when we look at the analyst price targets, there are 40 analysts who cover the name with an average price target which has shares declining almost 10%, the most pessimistic analyst having shares drop almost 80%, and the most bullish analyst having shares appreciate by 54.32%. A lot of these analysts are lagging in their price targets. That's why you're seeing, for example, Mizuho recently increased their price target from 500 to 16 or 1700 per share of Micron. You're seeing that across the board. A lot of these companies are having to reevaluate and re-rate and reprice shares of Micron just through the supply constraints that the overall sector is facing and the dominance that Micron has in that space. So you're seeing price targets triple in some cases, more than that, by a lot of these analysts. And even the most pessimistic analyst, I do believe, will have to increase that price target from $249 per share to, even if they want to be bearish, that $700 to $800 per share range is, I believe, fair, even if you're wanting to be a bear. And you can see in that top graph, that solid blue line, which is shares of Micron, and the dotted line, which is the analyst target prices on average. Shares and target prices are relatively in line, I will say. When we look at previous videos of other companies, especially a lot of the retail enthusiastic companies, especially a lot of those retail investor darlings, where there was shares trading well above analyst price targets, Micron doesn't face that same issue. And I will say, with a lot of these revaluations and re-ratings in the name, there are now less sell analysts than there has been for the past 12 months. Now, this valuation summary metric table is deceiving because, like I said, in 23 and 24, there was the bust of the chip cycle coming out of COVID, not as much demand, a lot more supply. This did cut revenue and profitability for all companies, Micron included, in this sector and space, which did cause no reporting in a lot of these PE multiples. But when we look at that forward PE, currently at that 10.7, like I mentioned, a 5-year low of 4, and on average around an 18.1 forward PE for Micron, and currently at a 10.7 PE multiple, shares are not looking expensive whatsoever. But it is important for us to take a look at that and see how those bust cycles do affect companies, and if one of those busts is on the horizon, as we are currently in that boom phase. And you see those gross margins, operating margins, pre-tax margins, net margins currently very healthy as of the last fiscal year end. When we look at those 2023 numbers, negative across the board, we are recently coming out of this bust and entering that boom. Really, the boom began in the second half of 2024. These do last a few years, so we are still in the early innings, which is why you see in 2027, even this year as well, when we compare it year over year, still phenomenal growth, because this supply squeeze in the memory chip sector is not expected to work itself out until 2028, the earliest. And those compressions in margins and having that negative revenue and not having that cash flow also trickled into having negative return on assets, equity, total capital, and invested capital. We are seeing those claw back to their 2022 highs, and we should see that be hit this year and new highs in 2027. becoming a more operationally efficient business. They are investing heavily in a lot of their factories, especially in the US, with the Trump administration's push for a lot of that reshoring and build in America. And Micron is taking advantage of that. And we should see those returns on assets, equity, total capital, and invested capital expand in the coming years, which should also mean a more operationally efficient business as well. We see that in the sales and revenue growth, those bar charts there, those bars you really see in 23. In some cases, red bars, which does indicate negative values in that bust year. But overall, when we zoom out, good 5 and 10-year compounded annual growth rate numbers, a 5-year CAGR of 11.8% in sales and revenue growth over the past 5 years, looking very healthy. Operating income on a 5-year CAGR of 26.7%. Seeing those earnings per share really healthy at 26% on a 5-year compound annual growth rate, 11% on a 10-year CAGR. We should see those numbers really expand when we have more quarterly reports, and does increase those compounded annual growth rate values. And with all that cash, I just want to mention that Micron is very efficient in how they manage their cash on their balance sheets. They have made smart investments in buying back shares in the early days, which you're starting to see that appear on the balance sheet as well. Current ratios, quick ratios, cash ratios, all looking very healthy. They have enough cash on the balance sheet to sustain a lot of these investments in these factories, both domestic and foreign. With all that cash over the years, what have they done? In the early days, they were buying back a lot of their shares, like I mentioned, which you're starting to see positive values on their balance sheet of these bought back shares. What I do like to see is, yes, you're seeing that dividend growth. Again, not really why we're buying Micron shares, I have to be honest, but they're servicing their debt and paying down a lot of their debt, which does improve their overall cash position. A very healthy business in the financial sense. Now, again, this is as of August 2025. These numbers recently have changed. Taiwan, India, and a lot of the European region starting to see an uptick in these trends. US is always going to make up the largest share of revenue. This is also where the biggest spenders are, the hyperscalers are, and Micron is a beneficiary of a lot of these funds. But that international segment of growth, I believe, will also be the next leg of growth when we come out of the next phase of the bust cycle. We're in the boom. That boom is going to continue to push forward, but at some point it will come to an end, projected to be end of next year, beginning of 2028. So let's see, time will tell. But having more international exposure spreads your eggs in multiple different baskets. If one region or one region's technology companies do cut back on spending, you do see divergences and discrepancies in how companies in other regions allocate their capital. And if Taiwan, for example, is spending heavy than the US, this can offset revenue drops in Micron's largest revenue generating region. So I do believe it's important for us to take a look at some bear and bull cases as shareholders, and also for new entrants into the name. I'll start with Micron being a key beneficiary of the surging demand for high bandwidth memory, which is essential for generative AI and GPU enabled servers. Micron has publicly stated that its HBM production is effectively sold out through this year, which does provide significant revenue visibility. The memory market is experiencing a structural shift. Rather than the traditional volatile boom-bust cycles of the past, improved industry discipline and supply constraints due to the technical complexity of manufacturing high bandwidth memory, this is helping Micron maintain its pricing power. We did see in 2023 the really big downturn in the first half of 2024 as well. This was really a supply-demand imbalance on the negative side, where we had supply significantly outpacing demand, which did cause revenues to fall off a cliff, margins compress, and have essentially negative earnings per share growth over that time frame. I do believe that the company has learned from those mistakes. The industry as a whole is still susceptible to those boom bust cycles, I will say, just through the nature of the business, whether there's going to be pullbacks in spending from hyperscalers and other technology companies, whether it's geopolitical issues that cause input prices to rise. Even though Micron itself as a company has that supply discipline and learned from its previous mistakes, I do not believe that they're fully insulated from that cyclicality of the sector as a whole. You are seeing very strong fundamentals and demand being driven, which in this case now, in this cycle, we're in that boom phase where supply is not outpacing demand. Demand is actually outpacing supply significantly, which is causing supply squeezes. And you see that in Micron really having that re-rating, but also a squeeze in terms of their supply, causing shares to rapidly increase on an intraday basis. Sometimes you're seeing it up 10-15% in one day. But even though we see that 300+% rally year to date, 800%, 850%, I'll say, over the past 12 months, many analysts argued that the stock remains attractively valued compared to the broader semiconductor industry. We saw that forward PE of 10.7. Bulls suggest that the stock is still trading at a discount relative to its explosive growth, compared to its explosive growth trajectory in the coming years, and we saw that in earnings per share guidance in 26 and 27. But I will say that they are vulnerable to those shocks, like I mentioned, whether it is companies pulling back, the hyperscalers and so forth. Micron right now is a beneficiary of those fund flows, but when there's a cutback in those fund flows, you will see that hit Micron's bottom line. But I do believe management positioned the company financially and on the operational side to be able to cushion a lot of these blows that may come in 2028. But let's see, time will tell. As always, thank you guys for making it to the end of the video. Please do hit that like and subscribe button and stay tuned for the next video.